So we are going to work on making some money in the next couple of weeks, right? And we're gonna keep it really simple. We're gonna just have like very simple strategies so that we can be really, really focused and it's very clear why stuff worked or didn't work. And to achieve that, we'll stay on mostly on higher time frames. We have very few strategies, and we will use the instrument MES because I think that's the best instrument to trade for you. Also because gold, for example, is not as volatile and it's at the all-time high, and stuff at the all-time high is always difficult to trade because it does weird stuff. You don't have any history when they're at the new all-time high, so it's actually not a very good instrument to trade. Not that you cannot trade it, but I'm just saying there's not that many good setups, and I feel like with MES there's good setups a couple of times a day. So every day you will have an opportunity to trade. So you're also not forced to take any trade, but you can also just focus on the A plus trades, which is what we are going to do. And what we do is we are going to just paper trade to MES, and then once you have a history of profitability, then we can move to a live account. But to MES, well traded every day, can generate a couple of $100. So this is all you have to learn. Only this, like the simple strategies, MES, and you're already good. You're already able to make enough money to not have to do other stuff. So, just to prepare a little bit for what we are going to look at tomorrow is I have a very simple chart up, right? I only have MES. Let me switch to 15 minutes. So I have MES here. And I have the volume profile with the POC and the volume. That's all I have. And what I'm going to do is, this is from yesterday. I'm just going to repeat again what we're going to do. And I'm going to show you simple strategies for your playbook. And you can start copying those strategies or the ideas, so you start understanding exactly what I do and just be able to see that as well. And if you want to practice, then you can always go to other commodities, other futures like gold, silver, oil, whatever, Bitcoin, and you can see if you have the same setups, right? So it's about the setups. I just feel like that on MES you have very liquid instruments and also you have a lot of setups, good setups. So what we're going to do is we are going to look at what happened yesterday, and then we are gonna do our little analysis, and then we're gonna see how today played out and where the trades were. And then we're gonna do the same thing tomorrow. Just we're gonna do it live. So again, the first thing we're gonna do is we're gonna do our yesterday or prior day high and prior day low, right? Okay. And then you see we have the POC from yesterday is here, right in the middle. So we're a bit away from the POC. So what happened yesterday is we started at the bottom and now we're here. And we basically had a very nice setup actually. So we had overnight session started, blah, 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 and then we swept the overnight session at around 3. And 3 o'clock is a very 3 o'clock New York. This is all New York time. So why is 3 a.m. important? It's because it's the European Open. And what often happens is that a lot of liquidity comes in because now all the Brits and the Germans and the French, they're all starting to trade and they're buying futures or selling futures. So there's a lot of volume coming in. Often that means that the high or the low for the overnight session is set. So here we swept the low that we built at 7. We swept it at, well, slightly earlier, but at 3 we started to bounce, right? So this is very expected. Of course, you're sleeping, but whatever. You could have set a buy order based on just the fact that this is the low of the overnight session so far, and then we hit that at 3 a.m. and we bounced. And that's just like a trade idea. Just look out for that. But just so you know that at 3 a.m. usually there's like a move. Sometimes not. But when a pivot move happens, often that means it's the low of the day, especially if the market wants to go higher, right? Then we had this here, right? So the high of the day before was hit, here, or swept, and then we came down, and that was at 9, right? So basically that was already near the open, and then we hit this thing here, right? This is what I call the resistance becomes support, right? R becomes resistance becomes support. The interesting thing here is just we kind of did like this little stair step. And when we have little stair steps, often that means like we're just going to get pushed into liquidity and then we bounce, right? Liquidity is this red line because it's resistance. It's just like liquidity, right? And you see us being pushed into the open, and then we bounced. So when that happens, that's often an indication that we're going to bounce into the open. Again, this is not going to be part of our strategies, but just like things that you start to notice once you get better at it. So what you need to look at are these kind of things, right? Like these little stair steps down, blah, blah, blah. I think here we had another one. See this one? We're here, and then we did the stair step here. Yeah, we ended up having like this big bounce, but that was because at 8:30 there was data, right? So this candle here, this big candle, was caused by data. But you can see how like these two things look very similar, right? Boom, boom. So my opinion is that these are like not natural. They're basically algorithms or machines that are pushing. They want to go higher, but they want to buy cheaper, so they're pushing us down to where more sellers are. Because they want to buy, right? So they push you down. So this is not like a strategy, but just like something you have to observe. Like when you see these things that look like very like calculated, often it's just to push us into a liquidity zone and then we bounce. So if you're getting better, then you know, oh, I can buy where the liquidity is because we're being pushed into that. Right? Anyways, so then we basically we formed this big shelf here, right? So we formed this shelf here overnight, then this big shelf here, and then we towards the afternoon we bounced. We made a high, and then we came back down, and as you can see, we have another resistance becomes support line here, right? So this day, Monday, was the resistance becomes support day. Like we had it like here, we had it like here, and then we had it here. What is the other thing that is interesting? We closed here above the POC, right? So now is it's shortly before 6 p.m. What's my analysis, right? Because we basically are going to work like this. We have four trades. Right? We have one, an overnight trade, two, a morning pre-open slash open trade, three, a morning trade, and then four, an afternoon trade, right? Like if you find more than four trades, you're over trading anyways. And we're not always going to find four trades, right? But if it's now the end of the day and we're looking forward to tomorrow, the next trading session, which starts at 6 p.m., I'm like, okay, what's going to happen? And then I think what's going to happen is, so for my overnight trade, we're probably going to go to previous day POC, right? Which is down here, because that's what we always do. Because overnight trading is it's difficult. Often it doesn't really make sense. But if we have like a good target, then we can do that, right? If we sweep if we sweep like a high here, if we sweep like a low here and bounce, or if you have a POC as a target, then that's something that we can take. So now the question becomes, so I know we're gonna go here, but where do I enter, right? And then there's a couple of things you can look at. One is, so now you have your take profit, right? TP. Now the question becomes, where do I enter and then where do I set my stop? One thing we have is we have this little shelf here, right? So I definitely don't want to enter here. I want to wait until we kind of like get to the edge of the shelf. Obviously, if we go all the way up here, then that's even better. But it's a very small shelf. The other thing that we could do is, I mean, you could just enter the trade hoping we go here, but then you would have to set your stop like really high and you're not really getting a good entry. Or you do a higher time frame. So what we're gonna do is and enter at signal of 1 or 2 hour candle. Okay. There you go. So if we get a good signal from the 2 or the 1 hour candle, then we can consider a short into the POC of yesterday. That's like a very classic trade. So let's do that. Let's also check if the POC is somewhere else. If we change the, oh yeah, see? The POC is higher here on the 5 than on the 15. So what we do is we're gonna move it a little higher just to be conservative, right? This the shape of the volume profile thingy here changes, right? So we want to make sure that we, and actually now we see that this shelf actually goes up to here, 740. Interesting. So this, now it's a bit more defined, so that's nice too. Okay. So it's a little bit in the way. Okay. So let's start, right? Let's shift to the 1 hour, and then let's see if we get a 1 hour signal. And if you don't get a 1 hour signal, then we will see if we get a 2 hour signal, or we get a 1 hour signal after 2 hours, right? So now everything is much smaller. Let's see what we get, right? So the market opens. we form a green candle, right? So this is not an entry signal, obviously. So let's wait for the second one. And we form a red candle, but now we have like this white and red, and that's also not really an entry signal, right? But if we change now to the 2 hour, we can see that we're already too far. Okay. So this is the 2 hour. I don't know why it showed more than that. Okay. So anyway, so as you can see now, do you see this candle here? Now this is a nice bearish signal, right? Is a red shooting star candle at the high of the overnight session. And we have our POC down here that we have as target. So now we can say, okay, we're going to trade this. It's now 8 o'clock, right? We've waited 2 hours and we got a signal. I'm going to set my stop loss up here. I mean, sorry, you know all this now, right? Stop loss is here. My take profit is on the 5, right? So my take profit is here because I want to be conservative. Let's make this white. This is my TP. And then my entry is now, right? Because it's 8, right? Okay. So just quick, do I see anything else that will also basically convince me that it now is a good time to enter? Now I'm back on the 15. Yes. There's one more thing. Again, this is like a lot of information, but here we are rejecting the POC of tonight. You see that? You see how this red candle pushed up into the POC and rejected. So we're not even like traversing again. We just went to the POC and the POC is like rejecting. So that's another good signal. And then of course we had this shelf on the side where we're like, okay, we're kind of like at the top edge. But the main indicator was of course the 2 hour close, right? Okay. So now what we're going to do is we're going to take a short from where the candle closed, which is here, down to the white line, which is the 5-minute POC. I mean, it could go lower, but you're probably going to see a bounce and it's going to be annoying and maybe you're asleep. So that's 19 points. We trade 2 MES contracts because they're small. Right? I think you probably pay less in margin for 2 MES than for 1 GC and 1 MGC, so it's still cheaper, right? 19 times 5 times 2. So that would be $190. Let's see what happens. Right? So we sell the contracts and then we see what happens. Okay, yeah, we're going down. Let's continue. See how we're going down, and see how we're on the way down. We're forming these shelves here and here. You see how these shelves have formed? That usually is supportive of continuation down. And boom, we hit it, right? Here. kind of, we're a bit, we hit it and we're already bouncing from thing. So what I'm going to do is I'm just going to buy it now, buy it back, close the contract. So we made $170. It would have been 190 if we had timed it, but with this replace thing, it's not as exact. So, okay, so one win, right? And what else? I think that's that. It's now, yeah, it's now 11:15, right? So also you want to go to bed, right? So let's see how it plays out overnight. But we're just gonna basically go to sleep now, right? We made some money and we don't want to overtrade, so we're just gonna see how the morning shakes out. And we're probably gonna hit this too, but let's just let's see what happens. Okay, so you see what happens. See how we had like a huge bounce here, basically around midnight or shortly after midnight. We have a big bounce all the way up to where we entered. So it would have been very annoying because we lost all of our profits. And then we dropped again really aggressively at like 5. And then we hit that other POC. So yeah, you could have hold it if you were targeting the other one, but it would have been like super annoying, and you never know what's going to happen, right? Why did we bounce? Well, I mean, we did hit a POC here, and then we see, because there's like 2 little peaks here, so we kind of like hit the first one, we bounced, and then we hit the second one. So that's why we always try to take profit at the first POC. And now it is 8:45. So now it's morning and you have your coffee and you're looking at the screen and you're saying, okay, what should I do now? Well, obviously now we have the overnight high here, which has not been hit yet. And then we have overnight low here, which we're about to touch. But it's only 8:45, so this is not yet, the market's not yet open, right? So it doesn't count yet. And then okay, now you see, right? Now we swept that overnight high. And we're immediately forming a hammer candle with big volume. Normally you'd be like, oh, maybe I should long this at least back into the POC, but of course now it's like 9, so it's shortly before the market opened, and that's the thing, right? You don't want to enter positions between 9 and 9:30 because you won't have like a lot of time for them to play out, and when the market opens, anything can happen. So yeah, I mean, if you had taken it right here, maybe, but you should avoid playing this, even if it looks really good, because what you also have is you have this one, and then you have this one, so it's like a lower high here, right? So it's like an M, right? It's like this M shape that usually plays out like this. But we don't have a view, right? We're not going to do anything. And then you see how we have like a huge drop, right? The market opens and we immediately have a huge drop. And then we bounce here. I mean, we basically hit this thing here, right? From yesterday. You see this node? Here. Hmm. See how we hit this node here, and then we bounced. It's not necessarily something that we play, right? This is not part of the playbook. It's just like an observation that I have. But as you can see, if you look at the, and this is very fast, right? Usually you would have a lot of time to observe everything. As you can see, on the way down, we formed some shelves, and then we formed a huge shelf here, right? Which is almost as big as this shelf already, even though this shelf formed until like 1 p.m. and here it's only 10, right? So we're forming this huge shelf here. And as you can see, the POC of today has come down already. Which is always bearish. So building big nodes lower means there's support down here, bearish, and POC coming down is also bearish. So out of the 4 trades, pre-opening trade, none, right? We didn't find anything. And then the morning trade, potentially prior to a low bounce, right? And afternoon trade, we don't have anything yet. So let's see, we're a couple of points away here. And basically, according to our playbook, or what should happen is that if we build a big node here, what happens is like the market comes down, bounces to the upper end of the node, and bounces back down, probably coming even lower, right? We don't know if this is going to happen, but we do know that there's probably going to be a reaction here because it's such a big shelf, right? So if I had to take a trade, I would probably try to short it somewhere up here. See where we had like this top wick here. I'm going to mark this here. Resistance. So a little exclamation mark, just to show me that, okay, if we come back up, then here, no matter like how like green and fat, green the candle and how quick it is, when it hits this point, it's probably gonna like get a rejection. Maybe a rejection all the way down or not, but there's just gonna be a reaction, right? We just have to expect that. And maybe here too, maybe this one too. See those 2 wicks? Just to make sure that I'm aware that these things are here, right? You should always mark them. And if it's reversed, if you go up, you should, mark them as support. So let me remove this because we already have enough stuff here. Okay, so let's see what happens, right? Okay, so now you see how we literally came to the edge here of the shelf here, and we had a big rejection, like a fat rejection, right? Like, this is very expected. So some people are like, oh, it's gonna bounce back, blah blah blah, and then we come to the upper edge of the shelf, which is very obvious, and then we reject here, and we're like, no, you either you long down here for some reason if you have like a strategy, or you don't long because you know that if it hits the upper edge, it's going to reject again, right? So if anything, you probably try to short somewhere up here. Like even here, even like the first resistance point, if you had shorted here, it would have been like 4 points, like $20. But now we're already, what is this, $35 in the money. So, but we didn't take that trade. The trade that we want to take is as I wrote it down, we want a long the prior day low. That's the only trade that we want to look at now, right? Because we already made some money overnight. And now I want to see if there's another trade. Okay. See, this shelf is becoming huge. So if anything, I would expect us to have downward continuation. Right? So that we do like this, bounce here, and then do this. But if I expect this, then where would I short, right? I would short here, right? Which is exactly where we rejected here, right? So if you expected us to go lower, you would have tried to short here. You could have, it would have been a good idea. Even if you bounce, you can, close it at the POC or whatever. But you would definitely not lose money. And if we actually continue going down, then you would make money, right? So let's continue. Okay, so let's rewind. And then I'll switch it to 1 minute, and let's see what we get here. You see how we hit overnight prior day low. Prior day low here is at 5651, and the lowest point here was 5651. So we exactly hit that point. We exactly hit it, right? Like to the penny. And now the question is, okay, should you wait for a signal candle or not? And it's a difficult question to answer, right? If you don't wait for a signal candle and you're right, you get a better entry. If you wait, but you might be the probability that you're wrong is also higher, right? Because you don't get a confirmation candle. So tough to say, right? What I will say is, because the POC is now down here, right? The profit expectation, if we took a long, is also not that high, right? Because from here to here would have been, it's again the same. Would have been like another 190 or so, right? So would have doubled our profits to almost $400 for the day if we played that first touch. Let's continue. So it's not like a great hammer candle here, right? We do get a bit of higher volume. So let's do it like this. Let's set our stop. We'll put our stop. Let's put our stop here, right below the 15-minute that we formed, right? Like always. Let's make this red. This is our stop loss. And then our target is going to be up here at the POC of the day. Make it white. Take profit. And let's see. Because now, the risk reward is still okay, right? We're basically risking with 5.5 for for like 15, right? So that's like 1 to 3. So I only have to be right 30% of the time, and I'm still good, right? It's still worth taking the risk. So let's see what happens. Okay. 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 And I mean, we kind of touched it, so let's just sell it here. And we made $125. Yeah. So we made 190. Profit. More in the overnight. We made 190. And then in the morning, we made 125. Okay. All right. So all right. So basically now we don't have much else to do, right? Because theory is now that we have a big shelf here, which means we're not going to bounce, right? Or if we bounce, it's going to be like really, really tedious because we have to go through this whole big shelf, and the POC is down here as well. So either we're gonna drop again like a stone, or we're gonna pin here, right? We're gonna stay here. And now it's like 12, you know. So I don't know. The only thing that I can say is, okay, we have a D shape here, right? D shape. And it's big. That means that we might just like, especially if we pin, we might just like traverse it a couple of times. So what I'm going to do is I'm going to switch on value area high and value area low. And those for me are going to be the edges of the thing. I mean, okay, value area low here is still, high is still kind of like high up, so it's not great. Let me do it like this. About like this, right? So this purple zone here is the danger zone. You don't want to trade inside of this zone, because what's going to happen is it's just going to chop around in here. What you want to do is you want to short the edge up here and you want to long the edge up here. And then you can decide, you know, if you short the edge up here, you can still see if you feel like, okay, we're going to go low, but then you have the best entry price because you have like the zigzag entry price. If you buy here, then you can hold it to the POC or to the upper edge, right? If it's depending on how round, and that's kind of like what you learn with time, depending on how like round the D shape is, you can either hold it to the middle or to the upper end. So if it's like a very nice round shape, you can hold it to the upper end. If it's like very pointy, like this, it's better to just take profits here because there's more like volume concentrated at the tip, and I would say the chance that we just reject here the tip is higher too. So that's why I only held it to the POC. Okay. All right. So that means for the afternoon trade, because D shape, we look for to trade the edges, big bounce bounce, unlikely due to POC shifting down, big drop still possible, right? So we would say the probability of a big bounce is lower than the probability of a big drop. So you would prefer to short, because then that puts you in a position to maybe just ride it all the way down. Whereas if you're long, the chances that we go back up are not that high. But we want to trade the edges, right? The edges are like here and here. And what we can use is the value area low, the blue line down here. And then maybe the, oh, this one already broke. Maybe this resistance line here that is left. Yeah. So basically if we touch this up here or touch this down here, I'm gonna go long or short. And then I can always decide how I feel just to the POC, or I want to write it down or up. Okay, so let's see. Let's see what happens. Okay, feel like, oh, it's going up. Okay, let's see. See how it's like really annoying? You think, oh, now it's gonna go up, it's gonna break out, and then it makes like a big red candle, and these are like huge candles. Huh? These are like 16 points. That's almost the profit from the morning. That's why this is the danger zone. It's like a maelstrom, right? Okay, so now you see how we hit the blue line where I said we should go long. So I'm gonna go long here, and I'm just gonna go back to 5,670. That's where I want to take profit. Ah, yeah. Okay. So another another 125 in the back. Okay. I mean, at this point, you had 3 winning trades, right? You should just like call it a day and be like, yeah, you know what? I don't wanna risk it. And it's only like 1 p.m., right? So the market is still going to be open for another 3 hours, but it's like a really shitty setup. The only thing you could do is like, oh, I want to short like the top of the edge here, maybe to if you still go down, or whatever, you know. So let's see. What we can do is we can also activate the VWAP now because it's the afternoon. This will also maybe give us another indication. So the VWAP is another volume weighted average price, is another area where you have liquidity. So for example, you see how we here we had like 3 rejections, which would have been an indication that we drop in the morning. And then we did exactly the thing that I said we did yesterday, where we did stair step down. Here in the morning into the open, we stair stepped up, right? Here, into VWAP, and then we dropped. So it's always, like, things are always the same. Anyways, let's continue. So, let's see what happens if we hit the edge again, right? Da, da, da. Oh, okay, so we hit the blue line again, so I missed that. You could have longed this again into the middle, right? And made another 125. Okay, now looks very aggressive. You see like a big volume at the bottom, but we are in the middle, right? So now we're not gonna touch this. Not gonna touch this. Blah 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 blah. Okay, let's see. Let's see how annoying this is. It was looked very bullish. Now again, like big, huge candles. Like people that trade here, they're just gonna they're gonna get destroyed. But we are smarter, right? We're good traders. We know that this shelf here, the D shape, we only trade the edges. We just wait for that. And if we had taken that second one, we would have made another 125. La 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 la. Okay, now let's see what happens. Maybe we're breaking out. Let's see. But we still have. Oh, I forgot to mark this. We still have this. Let's put this here. Okay, now this is interesting. Okay. You see how we have the high here that we made at 10:30, like this pivot high, this wick, and then VWAP is here too. So these three candles together are, they're like 20 points, right? Looks very aggressive. Looks like, oh, we're finally ready. We made like a W. We're finally ready to push up, right? But now we're getting to the edge of the shelf, and you have this resistance here, and you have the VWAP. So, and you see how this blue line has come down. It was up here. This is the VAH, right? VAH. This down here is the VAL. Let's see what happens, right? But there's a lot of sell liquidity here because we're at the edge, and the VWAP is here, and all this. Let's see what happens. Okay, we hit it. So this would be a place where you would not go long. You would go short if you would do anything. But let's see if we get some more confirmation. Okay, you see like the volume here is now increasing and we're going down. Exactly where we expected, right? Literally, I mean, this is literally like yeah, you would expect it to go down, right? This would actually be the point where you could say, like, okay, maybe they're just trying to fool us because they want to go down. So they're going to pretend they're going up and stop everybody out, and then they're going to drop. Because that would be like if this is a zig, now we're doing the zag, and then we're doing the, go to the lows. Let's see. But I guess I missed entry, right? Because I should have just set like an entry here. So, but we already make good money. So let's just see how it plays out, right? Maybe I'm wrong. Yeah, you see? You see how we came down? I mean, you see how if you had set like and now the blue line is here too, right? This was a really good entry actually. So this was like 22 points, right? 22 points on 2 MES is $220. So let's see how the rest of the day plays out. Okay, so now that was already done overnight. Okay, so that was the whole day. So we pinned, right? But it was to be expected because we made this huge shelf here, right? So the only thing that would probably have happened is either we drop or we pin, because there's so much, there's like a magnet, so chances are we're not going to go up again. And if you look at our trades, we did 3 trades. We made in total 250. Well, this is like, I don't know, 415 or so. No, it was like 250. No, it's 440. Okay, we made $440, right? And if we had been more aggressive, if we had taken like that second long here or that short up here, I mean, we would have made even more, right? We would have made like $600-700. And that's with like, I don't know, $400 of capital or whatever, right? So imagine you make that every day. And then if you make it every day, at some point you can do 3 MES or 4 MES 5 MES, you know, you can go bigger and bigger and bigger. It's very easy. Just have to like learn how to read the market and just respect the shape of the volume profile. That's all you have to do. You don't have to like guess too much. You don't have to like you know, be like a crazy analyst or whatever. Just have to like, okay, this gray shape is getting bigger. It looks like a D. So that means I go along the lower edge and I go short the upper edge. Especially if I have like really good you know, confluence, VWAP. I have this resistance line here. Down here VAL, and here VAH came down too, you know. And you're already better than like 95% of traders because most of them are going to get chopped up here. So you made some money here playing into the POC, and then you made money playing the previous day long, right? Boom. And you could have made some money here if you had identified the shape. There's also ways to there's like a continuation playing this lower. You know, it's yeah, it was a good day. So that was today, and that's what we're gonna do tomorrow. We're gonna look at these 4 opportunities for trades, and maybe now overnight we're gonna drop lower. Let's see. But what you should do is you should just be prepared to do this thing that we did today, right? Just looking at a volume profile, we're looking at volume, we're looking at the kind of like these resistance support lines, shapes, and that's all. And all we want to do is we want to find 1, 2, 3 good trades. That's all we need to find, right? And then we can make money. All right, bye.